What's up, everybody? Welcome to the ReCoop. I'm your host, Cooper Daniels, and today I've got a great one for you. I am talking to Michael Cotton. You guys all know who Michael Cotton is. Let's bring him in. Michael, how you doing?
Hey, Coop. Good, mate. How are you?
It's been a while.
Mate, been a while. Too long.
It has been too long. I'm in the bunker now. I don't even think I had that intro the last time we talked.
As I was just watching it then, I was like, I can't remember if this is what you had last time, but I think you're right. I don't think it was.
I don't think I had it. That's done by the impeccable, the impeccable block runner from Flemish Giants.
Love it. Love Block Runner. He's great.
Yeah, he did that for me. That was a nice thing of him to do. So what's going on? Is everything a peachy dory over there at ALGO Mint and Meld Gold?
Mate, we're all good over here. Australia is, we've had wild weather, which I feel like the US has been pretty wild as well. But like where I am, for example, we had like one cyclone in 8 years. We've had 3 in the last 4 months.
Oh, wow.
So like just a bit strange on the weather front, but on the work front, the market's looking a bit more interesting, which is great. So it definitely creates sort of a more productive space to work in, which is good. But I'm sure we're going to pull the lid off that, and we'll get deeper into that as we get into this conversation.
Yeah, for sure. I mean, for everybody watching, we've had Michael Cotton on the show, I think 3 times, if we're counting the first Algo Fest. And, you're a builder. Algo Mint, Meld Gold. And then I know that Algo Mint and Optio Capital. But I know Algo Mint, just that whole umbrella during the bear market, you guys didn't stop. You've been building the entire time. You picked up some things. So what exactly is part of the, the umbrella of what your, of the projects and the protocols that you are now sort of running, or not sort of?
Yeah, so officially, like as my role is at Meld Gold is where my official capacity is. So founder and lead for Meld Gold, and then CPO for Optio Capital, which is Chief Product Officer. I had a few people guess what CPO means. Some of them got it drastically wrong, but it's Chief Product Officer, which is basically looking at product market fit, competitive landscape, analyzing, whether a product makes sense and how they're going to get into market and who they've got to fight to do so and those sorts of things. Right. And then Algo Mint. So I still have a deep involvement in Algo Mint. A lot of people will be aware Algo Mint's also been helping on some of the other projects in the ecosystem. And Optio Capital itself has sort of helped with a range of different M&A deals as well, of bringing certain projects to merge together, which there's still a fair bit of ongoing work for, which is really about pooling resources and getting projects to collaborate and build something bigger together than smaller separately. Yeah. So in terms of projects that we are helping with at the moment, the Algo Mint team is helping with, which is guys like Giles, TNT, is things like Pact, which hopefully it looks like there's some good news coming for Pact shortly. So hopefully that'll see its sort of own sales as well, which would be great. And XBacked. And then we've also been contributors to Compex and XNFT.
Yeah. So you guys are, there's a ton of things you're responsible, or you're helping, and you have your hands in a lot of the different things that are in the Algorand ecosystem. And, as the CPO of Optio Capital, a venture firm, right? So I think something that a lot of people in the Algorand ecosystem are starting to pick up on is that there hasn't been a lot of VC activity in Algorand, right? So obviously Optio Capital is still in Algorand and is still deploying capital. But what do you see, and what can you tell everybody that's watching? Like, what do you see as the landscape for, venture capital in Algorand right now?
Look, it's pretty rough is the very, very short description. And for a lot of the venture capital side, it's comparative, right? So it's not just about, hey, is this good? It's about, hey, is this good, and how does it compare to alternative options? Right. And that's really where I think Algorand struggles. Obviously myself, I'm a deep believer in Algorand tech. very clearly. But I think what we're seeing play out at the moment is many of the venture capital firms, it's not that, oh, it's great tech, or, oh, there's some interesting options here, or this could be an interesting technology for X use case. It's, okay, overall, how does this compare to its competitors? So, an example I've often used is, okay, I'm going to invest in GameFi. Do I want to invest in GameFi inside Algorand if I'm a game-centric fund? Who would I be the alternatives I'd invest in? You probably look at something like Immutable X, and Immutable X has got $250 million on hand. It's got 260 odd full-time team members. It's got, I think it's sub 200 games launching this year, 3+ AAA games from AAA game studios that have launched tier 1 games before. They've poached executives from Blizzard, executives from things like EA Games. When you then go into that comparison, it becomes very, very difficult for them to go, okay, if I had to choose, where am I going to invest in that category? It's probably more likely to be something like an Immutable X, because the likelihoods of success would be higher in that particular instance. So, this is where it does become quite difficult. So, I don't sort of take it as necessarily a dig at, Algorand tech or the technology itself. It's more just a, analytical decision of what makes the most sense, and sort of keep in mind as well that you can't have one investor. That doesn't work either. So you need multiple investors to make the same analytical decision, and generally vouch as well. So much of investment comes from referrals as well. So it's one fund saying, this is really interesting, we have belief in it, we've done DD and we feel really strongly about this, you should have a look as well. So that sort of compounding flow-on effect is really not what we're seeing at any sort of scale currently.
Right. Maybe I'm taking for granted people understand your history with Algorand. Can you break down, how did you get involved in Algorand? And I know it was a long time ago, and and why do you continue to believe in this technology and ecosystem and all of that?
Yeah, so Silvio came out to Australia. I think he did his world tour pre-Algorand mainnet launch. I actually didn't physically get to see him here, which I am devastated about in hindsight, because I sort of missed out. But I was very sort of close in following what was happening. AJ Milne, who is the CEO of Optio Capital, he was a big fan of Silvio as well. He actually studied under Silvio at MIT. He did Silvio's blockchain course there, so he already had a very much a bias towards Silvio. Some of the other funds we were close with here in Australia, funds like Apollo Capital, they had invested in Algorand, had met with Silvio when he came out here. They were very bullish on the technology. So we were quite biased towards the concept. Then meeting with the team. So we met with a lot of the team very, very early. Went through what their beliefs were, what they saw the future of, how they saw the technology actually playing out, what role they saw it take. So little even things like how they saw nodes decentralizing, which was very different to what they pictured back then to what we have now. But conceptually, a lot of what they were doing made a lot of sense. So, found that incredibly interesting. And I don't know, it could be you across how they originally pictured for nodes, for nodes to be decentralized. Do you know this original story?
No. Actually, I don't.
It's quite an interesting tale, and look, it made a lot of sense at the time. But conceptually, the idea was that major institutions, major corporations, major entities that wanted to come on chain and use things like the Algorand blockchain at scale would essentially be replacing other infrastructure that they currently utilize. So, in the case of like a Visa and MasterCard, they would be replacing a huge amount of their server network.
Right.
And the idea was, okay, instead of paying $10 million a year for servers, you would pay $5 million a year and run nodes to secure the network you're going to rely on for your transactions to process. So the idea with major adoption was they would see hundreds of these kind of institutions wanting to secure the network at a fraction of the cost they were paying for their traditional infrastructure. They would actually use that same sort of funding to fund and secure the network they were then going to rely on to process all their transactions. So conceptually, I think that actually made a lot of sense. And there was this then trade-off of, these are companies that are making money from using the infrastructure. They would have an infrastructure budget that would fit what node operation would cost. And therefore, this financially and economically does make sense, which it definitely made a lot of sense. And if achieving those goals had been reached in the timeline that was hoped, it certainly would have fit the bill. We just haven't had that side of adoption take place, and we haven't had those organizations come on chain and then put in place that infrastructure needed on any scale that would make sense.
Yeah, no, and
Um,
I did know that, obviously now to this day we're seeing a pivot, and it's I imagine that there's I don't even know, but it's certainly a pivot from Silvio's vision, like you just laid out, and now they are having to realize that adoption did not happen. Yeah,
Exactly. And look, I think in terms of why we sort of still believe in the tech, I think
yeah,
John Allen Wood said it really well, which it is a foundational technology. It is, a base block for building whatever you like. And
yeah,
Algorand definitely achieves that. And anyone who goes and uses any other ecosystem understands the tech is brilliant.
yeah.
It's incredible. It's seamless. It's useful. It's scalable. It's trustworthy. It's reliable. All the things that you would want from a Web3 technology to feel Web2-ish, which in reality, the expectation is with global adoption, that Web3 layer will be abstracted away. It'll just be like using any application you would now. It just
Mm-hmm.
happens to be secured by blockchain. I actually also heard someone talking last year, and they sort of described it that you'd end up seeing like a little chain symbol in your browser that said that this is secured by blockchain, and that was almost the extent of where your understanding of, there's blockchain behind this would come in. When you're doing a transaction on your phone, there'd be a little chain symbol, and that would tell you that it's blockchain secured. So, and I think that's actually probably pretty true. That's ideally where we'll end up.
Yeah. I remember, I look back to, and it's a long time ago now, we're in 2024. I don't even remember when that first Algo Fest was, but it was at least, I think 3 years ago, or almost 3 years ago. And
It's got
so,
to be, yeah.
at that point, the ecosystem was, there was shortly before that, it was just talk about maybe CBDCs or, still these large institution hopes, right? And country and governments and stuff like that. But then a DeFi landscape started to form just a little bit. We had a Yieldly, which obviously didn't work out, but then Tiny Man came through, and it was you guys tokenizing, wrapping, or however you want to call it, Bitcoin and Ethereum, and actually giving the ecosystem something to do, and a way to participate in. There wasn't a lot of ASAs and things like that, and so you know, we've come so far, and I definitely have utilized GoBTC to grow my Bitcoin bag. It successfully helped me do that. It's been safe. It's been secure. The bridge is never, there's never been anything wrong with the bridge, right? We've always been able to get out and get in as however we wanted. Um, and then of course, now more recently you've tokenized gold. And obviously this is something that you are, this is one of your wheelhouses. Sorry, I've been I haven't. So all the guys that have been watching my show, they know that I took Dayquil earlier today, and I had all the energy in the world, but I have hit a bit of a brain fog moment. So sometimes words will. But precious metals and gemstones. This is something that I think that you have a long history with. And now we can participate, and we can get gold exposure, we can get silver exposure. There's the USD baskets. There's a lot of different things, and now, of course, how you have your hands in Pact, and XBacked is also something that's very interesting and growing. So you're doing a lot of things, and I don't know. I guess my question is, we've come 3 years, and now we're here. We've had these DeFi rewards, and the sentiment is certain people are holding on, they're hopeful, they're optimistic, and all of these things. But there's also a lot of the core guys that still are hopeful and optimistic and believe in everything and believe the builders. But it seems like we're beat up a little bit, and it seems like the builders are beat up a little bit. And now we're at this point where we're, in my opinion, and I'm sure I can't imagine that you would disagree with this, but like during this voting period, it seems like we're sort of picking and choosing, maybe folks finance Tiny Man, and we're going to rug the DeFi rewards from some of these core builders like you and ALGO and everybody. And then Algo Foundry is another example that isn't quite getting the support, who's also been here from the beginning. I don't think a lot of people know that, but they've, maybe not the beginning, but they've been around for a long time as well. I don't know. Are you discouraged? Are you how are you taking in the current environment? There's a vote going on right now. People have a few days to vote still. What are you feeling about that?
Yeah, well, look, and probably a good sort of tone to set too. So for like Pact and XBacked, the ALGO Mint team, so I can't take credit for a lot of it. The ALGO Mint team do, a lot of the work there, but most of that is really necessity. It was either let these projects sort of fizzle out because they're struggling to have the right pieces needed to sort of fill some of the gaps, or try to help them succeed. And I think a big piece of that is to recreate these projects from scratch is probably a nearly impossible task in
Right.
the place we are now in the ecosystem. So, if we let these things, and for those that are very familiar with code, if you let things sort of sit too long as well, so if you temporarily shut them for 6 months or 12 months, it can be quite difficult to actually restart them. Get new people up to speed with code. It can actually be quite a hard process. So, generally, if you leave something like that live for too long and you actually do shelve it, it can actually mean more of a death sentence than people probably realize as well. So, a big part of this was more out of necessity. I'd say 12 months ago, 2 years ago, there probably would have been a lot more people who would have put their hand up to say, "Oh, we'll step in," and it wouldn't have required us to step in as much as we have.
Right.
But sadly, there aren't a lot of people, willing to do that at this stage. Keeping in mind that it's not just the work, it's the legal risk. It's all of these kind of pieces, which I do think is forgotten a lot. I think people even forget with TDR that all these projects sign legal contracts and have additional legal exposure for rewards they give out to the ecosystem. Because that exposure through the contracts gets passed from the foundation to the projects themselves. And I think a lot of people also aren't really very familiar with those kind of risks. I think that's kind of, forgotten about. But I think in terms of the ecosystem itself, what we're probably lacking, and I think what's probably missing is we don't have all the pieces we need to be DeFi competitive currently. We have a great base technology that means the DeFi we do have is highly effective. But we need more of the building blocks and more of the Lego pieces around composability and DeFi to make it sticky. So, at the moment, TDR helps retain, which I also think is the other metric that's kind of missed. I think people talk about the growth. And if you actually look, like Bahar and the team at Tinyman did some stats around growth that were really compelling. But if you look at what we probably would have lost without TDR, I think this piece is kind of missed as well. How much would DeFi have shrunk without TDR? I think this metric is also overlooked. I actually think we would have seen quite a pullback in some of the DeFi metrics had we not had TDR. So I don't think it's also just about growth, which there has been some great growth numbers that the Tinyman team put together. But it's also been about retention and what we would have lost had we not had TDR.
Right.
But in reality, we need a combination of TDR and we need enough resources for the projects to actually deliver better products that can be more competitive in market. And we've got a great base technology. If we can also be DeFi competitive in terms of the products we're offering, it makes a very big difference. And I think some of the pieces in there that are also missing in terms of resources is for any of the major inflow of capital to come into the ecosystem, keeping in mind, depending on what metric you use, 80 to 90, I think it's like 92% of TVL and DeFi volume in whatever metric you want to use for that is made up of whales. And they really underscore what creates so much of the utility for everyone else.
Right.
Most of those require things like high-level audits, often multiple audits. All of these things are currently extremely expensive. The Tinyman team were just talking about how much the audit for the new version of the Tinyman platform is going to be to get a tier 1 audit, and it was outrageously expensive.
Right.
So these kinds of things are also kind of missed from the community, that without these kind of things being done as well, it's also very hard to bring in some of the major liquidity flow and venture capital and pieces of the puzzle we need to grow the ecosystem. So, collectively, I do think we do really need TDR, but we also need an additional plan about how we're actually going to get to the point where the ecosystem can also survive and flourish without TDR.
Right. Yeah. I mean, and I think you're basically answering it, but what do you say to, well, okay, so there's a couple of things. Let's have you respond to a couple of things that I've heard people throw out there. One, I think along the lines of TDR is that it's not helping the ecosystem grow, but you just, I think, pointed out that a lot of it is not about growth at this point. It's also about retention. And, but that it's not, and it's just, like you, I think, alluded to, is just kind of lining the pockets of whales. And it's going to the project. Like, you know, like it's going to Algo Mint with the Go BTC, Wormhole BTC pools and stuff like that. Like, how do you respond to them?
Look, I think there's an interesting piece here about how important whales are, and I feel like there's probably this distinction where the community feels like they should get most of the rewards is probably the element from that, which I certainly don't disagree that the community definitely should be getting rewards. It's, you know, kind of the core piece of participating in DeFi. I think this is like the classic. It's the same with voting. Do you get more votes if you own more tokens? Do you get more TDR if you have more capital to commit? Because, you know, DeFi TDR is an open market. Anyone can participate and join in and provide the capital and earn the rewards, right? So it's kind of this interesting distinction of where is the rewards based on unique wallets? How do you stop that being gamified? Is the rewards based on dollars that are committed into DeFi, which is currently pretty much what the measure is. It's more about dollars committed versus, you know, number of individuals. There's also a pretty interesting debate about how well-versed retail is in understanding the risks they're taking as well. So a great example is impermanent loss. I'd say most, you know, retail users don't have a really good understanding of what their actual net gains are in an LP position inside the market. So, you know, that's a really big piece that I think a lot of people sort of find is not well understood. And we also don't have the tooling currently in Algorand where you can even go and input a position and see what your actual net APY is after impermanent loss on an average of like a 30-day, 60-day, 90-day position. So like I think they're absolutely critical. And I think to that point before, almost every other major ecosystem that we would like to emulate and get to the level that they are in DeFi, dominated by whale TVL making up for most of the utility inside those ecosystems. Keeping in mind that TVL doesn't necessarily demonstrate the number of users using the protocol. So, you know, a great example, and I was talking to Stitch about this recently, and he brought up a really good point about how hard it is to manage concentrated liquidity on Avalanche, Trader Joe in particular. A great example is the only people who can really do that are more sophisticated users that are more than likely whales. You know, otherwise, you know, it's not necessarily an exercise of efficiency in terms of value creation if you're doing it with a small position. But they're very fundamental in things like Trader Joe achieving the trading volume they've had and allowing users to buy via DeFi in volume, which they couldn't do if it was only retail users because they wouldn't have the sophistication to run those products properly. So, you know, it's an interesting debate, and probably some products are more aligned with being very retail centric in terms of TVL and others less so. I think the other piece of all of this is metrics for projects inside Algorand to actually gain additional interest from outside venture capital, outside investors. You know, these metrics are supported by TDR. So, and what we potentially could see on the back of this is with TDR going away, do we see actually some of these projects have dips in their TVL, which keep in mind that most of TDR actually funds a lot of TVL on folks finance, for example. Like most of the you know, borrowing and then redeploying from folks finance is to utilize TDR. So with some of these other pullbacks, it'll see a drop in TVL and probably a drop in utilization across the board for a lot of these projects, which, you know, in a current bull market also makes it actually harder to then raise money. If we're actually seeing a pullback in metrics during an up market, can be quite difficult to explain. And makes it quite hard. So we've kind of sort of set this up in quite a bad timeline in terms of what may play out here. It is what it is. You know, the system, the voting system is how it is. And if that's what gets voted, that's what we'll deal with. And, you know, the builders in the ecosystem will battle and, you know, keep doing what they're doing. But, you know, it certainly is not ideal.
Yeah. Right. Now, with like if you okay, so if what's my question? My question is, well, I have a question. So I'll probably remember this other question. I had a follow up. I'm sorry, but so let's say, for example, there's been a proposition. You know, there's been a proposal out there to get rid of all of TDR, like you said, and or not you said, but like if that happened, and put all of those incentives into node running. Now, is that something? I think you just answered it, and I feel like I have your answer already. But if that were the case, would that just mean that, you know, Optio Capital in all of these different projects just have to run a lot of nodes and they're able to earn rewards that way. Would that be, do you think that's sufficient? But I see the hole there is that that's not attracting the big liquidity to come over into, you know, and all that.
Yeah, and probably I think collectively the thing I think we're missing is an ecosystem, is an overall strategy for Algorand. And I think because none of these things, talking about them in singularity, are actually probably overly effective. I think at the moment we're all assuming, me as well, assuming that we want a thriving DeFi ecosystem in Algorand. I think there's also the assumption we probably want a thriving NFT ecosystem, and there's an assumption we want a thriving RWA ecosystem, and there's probably 10 of these verticals, right, that we all sort of assume we want to be thriving. What we haven't got is a strategic plan about what we should be targeting, what we are most likely to have success in, what we should target now, and what we're missing or need to do in order to achieve that goal. And I think that also needs to be overlaid with competitor analysis. So a great example is, I think it's going to be very, very difficult to battle in the GameFi sector, which is not to say we won't organically get some GameFi. We're an investor in AEGA Tactics, for example. Love what the guys do. I think they're doing some great stuff on the gaming side. The Fractals Monsters team are brilliant, so like there's plenty of guys doing some interesting stuff on the gaming side, but to think that we will have a strong footing in gaming without it costing a lot more than it might for us to tackle other verticals, I think is unrealistic. So, I do think we're missing that really, really hard and analytical look at what we should be trying to focus on, because strengthening our node infrastructure is definitely critical, but we also need to ensure we actually bring activity on chain so that long term that will actually play out and be economically viable. Whereas if we do one and not the other, like both ways, if we only try to bring utility on chain but don't secure our infrastructure, it's also going to be a problem. So we need a conducive plan that actually achieves whatever we actually think is the key strategy. So I think there's a bit of a debate about what that strategy looks like. I think I sort of struggle with thinking NFTs are going to be major for Algorand in the immediate future, mostly because if you look at the NFT volume of things like Solana and Ordinals and Ethereum, it seems like we are struggling to get any traction in comparison to the growth metrics in these other ecosystems. There's also huge competition, right? Like we've got thousands of different NFT platforms. We've got thousands of different projects out there launching NFTs across every blockchain. So things like Ripple, for example, have been pulling back from NFTs. They're really leaning institutional DeFi because they realize that's a battlefield that maybe is not best, where their money is best spent. And we need the same for Algorand. We need to look at where we should be absolutely focused on, what we're missing, what we need to do to be competitive, and we should be working towards achieving whatever that goal is, and ideally communicating that as something for the ecosystem to get behind as well.
Yeah. And then I remembered what I was going to ask, and it's a little, and you're answering it, but just to be the last thing, what about this sentiment, okay, so TDR hasn't brought the adoption that people, expected or wanted. And if you can't survive without free money, then should you even exist? Like, how do you respond to something like that?
I think the problem we have is the DeFi projects aren't in a place where they can survive without free money. So I think it's probably a clear-cut choice of do we want DeFi in Algorand? If so, there's an expense to getting it to the point of being viable. I also don't actually think, and to my point before, TDR alone is not enough to actually get DeFi to where it needs to be. The projects need to be able to build the products to deliver to market and get all the audits done and meet all the right different elements, get all the legals done, be able to get legal opinions for different jurisdictions. Like there's a lot of pieces that I think people miss to get to the point of actually being a viable, self-sustaining DeFi ecosystem. And it is quite different. So for those that aren't aware, Meld Gold, for example, was actually before ALGO Mint. So not just from before Coop, I know we're saying it came after, it actually was prior, but it has a whole part of its business that is working with companies that aren't in Web3. So it has quite a different scenario in the sense it has revenue streams and it has income that isn't reliant on people specifically in Web3. DeFi requires people to be specifically in Web3. And a lot of people also aren't familiar that you can't go out there and market directly around come and earn yield and all these kinds of things, which I think a lot of people also don't understand, that there's a lot of legalities around these kind of activities that make it extremely difficult to do what you would do in Web 2. So, that is really missing from the puzzle as well. So I think the key piece is we want to get there. Or I suppose the question is, do we want DeFi to exist for Algorand? And if we do, we need to actually get the right pieces in place to get there and make the ecosystem so it can fend on its own without needing TDR.
Yeah. Well, what do you think? What do you think Algorand should be focusing on? I mean, you have such a deep understanding of all this, and and it's impressive. I mean, have you ever met Silvio? Have you ever sat down with Silvio? Why aren't you CEO, Michael? I'm just kidding.
Slight panic setting in now. I've gone too far, haven't I?
No, you're impressing me. It sounds like somebody. Okay, I don't want to. That's not. I don't need to throw shade. Okay, so I guess my question is that if let's role play here. Let's say you are in charge. You get to make these decisions. Where would your focus be? As somebody that was able to, you're never totally in control, but if you were to guide this ship, how would you where do you see like Algorand's strengths and where it can really, you said it, GameFi would be tough. NFTs currently are tough in the short term. Like, what do you see as where Algorand can really play this out and find its, niche and all of that?
I think a part of this puzzle, which, and so I will give you an answer, but a part of the puzzle is I don't actually have an understanding of what foundation resources look like. Like, what are they actually working with? Because that's also fairly critical. So, for example, we might be well positioned to tackle institutional DeFi.
Right.
But to tackle institutional DeFi, there is a set of resources that are required in order for us.
Sorry, I'm going to interrupt you real quick. Will you explain to everybody what institutional DeFi looks like?
Yeah, so institutional DeFi is more about regulated institutions and incorporated companies actually utilizing DeFi rails for financial capabilities. So, a really good example would be business loans, would be leveraging different types of assets such as commodities for lending, would be payment rails for settlements, would be FX trading. Would be options, would be all of these kind of traditional tools that financial institutions or funds or organizations would utilize in their B2B world, utilizing that on DeFi rails. And there's a fair bit required in order to achieve that, because one of the key elements with institutional DeFi is they need to feel absolute trust in what they're using, because keep in mind that the risk appetite for those kind of organizations is much lower. So for example, a project needs to probably have not just tier one audits, but also a whole range of different financial institutional audits that are quite different as well. So they would need a lot of those things in place to really utilize a product and feel very confident in utilizing a product of that nature. So you're seeing things like Ripple, they're building the AMMs and the lending markets into the layer one. So the idea being you trust Ripple, you trust these bits of infrastructure because they're a part of the Ripple blockchain, the XRPL blockchain, versus necessarily being a third party. So you're seeing some of these, elements come in to try and make it feel more safe and secure and more trustworthy for those kind of customers. So, those kinds of things is a whole nother kettle of fish to tackle. There is a whole set of work to be done to ensure we could actually be ready for that kind of a product. And so this is where I sort of say the resources are quite important, because understanding what's actually at the ecosystem's disposal to achieve these goals is pretty critical. Traditionally, you would not necessarily have just the foundation funding this. You would also have VCs coming in and funding this, which is also still a potential option. And I do think with a really strategic plan and a really key focus, that would be easier to bring people back to the table who maybe have sort of passed on Algorand. And so I think, if you were going out to, because keep in mind, most funds have a mandate as well. So most funds will have a very particular categories they're investing in. So if, you're coming to a game fund, they want to know there's a real focus on gaming. If you don't, that's not to say they won't invest, but the bar becomes higher in order for a project to get investment from them, because there's obviously additional things that they're going to have to overcome that they wouldn't in other places. So, they're kind of the elements that are also pretty important, where is if you are going to institutions that are investing in institutional fintech and you're saying this is all this technology does, that everyone's focused on that kind of an area, it's much easier to get them on board because it really clearly admits and they know they're going to have all the support they need because this is all this team is focused on. Right. So, there's a whole range of verticals, whether it's institutional DeFi, whether it's RWAs on chain, which takes a few different formats. So I think you'd have to be pretty clear about what would be encompassed in that strategy. Mm-hmm. But I think sort of going through and identifying what they might be is pretty important. And we are seeing some good success in things like Lofty. Mm-hmm. Jerry and the team are doing great stuff. Seeing things like Travelex doing great stuff. Mm-hmm. Meld Gold, which I'm biased, but Meld Gold doing great stuff. So, I definitely think there are businesses that aren't reliant on the Web3 space that are delivering products that are finding value outside of Web3. But, the key element is how much do we want to see people coming through those channels and then expanding out into a broader world, and I kind of sort of visualize it often like a shopping center. People might go in there to go to see a specific shop, but then they end up looking at 12 other shops as a part of their trip. Exactly. How much do we want to see that sort of complementary business sort of occurring and individuals actually ending up spreading out and seeing other things inside the ecosystem as a part of their transacting? And that's really where identifying where we want to focus and then how we can build value between these projects is important.
Yeah, I feel like before I derailed you a little bit with the institutional DeFi breakdown, you were starting to be like, you don't know how well positioned at the foundation they are in that arena. It sounded like you were about to say.
The more I don't have an understanding of what the resources actually are. So it's right. I don't to really understand what strategy you would piece together. You also really need to know what your arsenal looks like. So right. What does the full foundation team look like? What are they all capable of? Where do they specialize? Also, I think I know a lot about what's happening in the ecosystem. I'm sure there's a hell of a lot I don't know, but you also need to take into account what projects exist, what pieces of infrastructure have we got. So, all right, we need these 30 things. Okay, if we're going to tackle this vertical, we've got 3/4. This vertical, we've got 5%. Yeah. Those kind of elements need to really be taken into account when trying to understand what it's going to take to get us there. Right. And that's not to say the 5% doesn't win, because it might be that it's not institutional DeFi. So the actual work to be done, there's more work to be done, but it's easier, it's less expensive, it's faster. Because on the institutional DeFi side as well, institutions don't want to use platforms that they think may only have 3 years runway, for example. Like that's not ideal. There's definitely incremental gains and value that are not worthwhile to have consistency and lower and higher risk. So they would much rather have consistency and maybe not as useful or not as effective, but it's reliable, it's going to work. We don't have to change systems in 3 years. Like some of these elements are also coming to play.
Right. I mean, and just based on what I'm hearing you say, it does sound like the foundation is, and Silvio and his from what I understand, what he's really interested in is solving these bigger problems, these institutional grade, these governmental grade problems. And, I don't know a lot of details and I don't know how far past tests and stuff like that, but you do see like Bank of Italy and you see these larger things. And you pointed out to these real world asset like Meld Gold. And, so it seems that is the direction that they're looking to go. And you said it with the DeFi, I use other DeFis and there really isn't as a usability metric. There's nothing better and faster and more reliable than Algorand when it comes to DeFi. It is very rare that I ever use an app or anything on Algorand that it's not just like boom, 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 done. And it's cheap and there's it's very easy. So, as somebody that is a layman that's been using the using the DeFi and been in the ecosystem for a long time, it's like, well, why won't this take off at all? I don't want to say at all, because we've definitely had a moment. There is a group, there are people using it, but it is frustrating. And it seems like the perfect blockchain. It's never been down. You don't have to deal with a lot of these things that these institutions and people want from a blockchain, that security, that you can count on it. So, I mean, I know that you've sort of answered it, but, I'm just, sort of,
No, look, Coop, I think we've talked about a lot, and I probably rambled a bit, so it's good to sort of like recenter. But I think the issue again is the products we currently have in the ecosystem, which is not a diss at the products. Obviously, I'm a investor in Folks, investor in Tinyman, investor in most of the products in Algorand. So very close with everyone and deeply invested in everything that pretty much is going on. But at the moment, our DeFi products aren't competitive in the sense of, as a collective, we don't have the right tools and the right pieces of the puzzle to be competitive. So if we just use DEXs as an example, we've got Tinyman, Pact, and Humble. If you go to Trader Joe, and it's always my sort of example, there's plenty of others. We saw DEX volume on Solana, for example, Flip Ethereum, which was quite interesting to see, almost hit 2 billion for 24-hour DEX volume, which is an incredible statistic. Yeah. But if we look at Algorand, we don't have things like concentrated liquidity. We don't have a lot of the functionality needed for that kind of transaction volume to take place, which all of those things are very possible. But you got to keep in mind the teams need a lot of additional funding. They need a lot of additional funding, not just to build, but to do those audits, to get those things up to scratch. To deliver those products that would mean it would be a lot more usable. In reality, still doing a trade of any volume isn't possible in a way that is efficient if you compare to other ecosystems. So like the DEXs I feel like the DEXs are really the foundation for most of sort of what takes place inside the ecosystem. And that is a piece that we really need to improve on, but we need the resources to do that. So that's a fairly core piece as to why we are struggling to see people come over and use the technology in the way they should. And also, I think a good thing to keep in mind is that the TDR is actually not enough to bring people away from better utility into the ecosystem in the kind of scale we want the ecosystem to be. So, for example, if we sent TDR 10x and increased the volume, we still wouldn't be as efficient as concentrated liquidity AMMs. So it doesn't actually solve the problem. It helps us for the minute. And at the moment, I think the current thinking is if we can keep the stats up and we can see some more interest in the ecosystem, we can see some more funding, which will allow us to get to that next stage. That's personally, that's sort of my feeling of where a lot of the thought process is. If we can keep the stats at a certain level, we can actually see some of these projects get additional funding with the market looking a bit more interesting. And that would give them what they need to actually deliver on some of these pieces that are required. So, that is kind of the element that we're really missing, is the projects being able to then build out these tools. And keep in mind that with the bull market coming, the time frame is not huge in order for the projects to really have a shot at doing that. They would need to lean in quickly to be able to achieve some of these things in a timely manner that mean we can really sort of leverage this next market cycle. So, at its core, we need... One, we also need new founders. We need new projects. We helped with the Compex project. Kieran from ALGO Governance, who's brilliant, who's now in there looking after and spearheading that project and running that whole project and doing a brilliant job. There's some of the tools that we still need to see coming to market that are actually make DeFi more usable, more user-friendly, and more impactful. But we need more of that in more scale to ensure we can be self-sustaining and competitive with other ecosystems.
Yeah. Okay, to put a button on this topic, so obviously there's a lot of people that are watching this that probably haven't voted yet. I mean, I'm a bit jaded with the governance voting at this point, where it does seem like larger wallets are going to dictate this for the most part, anyways. And most of the people watching this right now are probably not the size, but maybe they are actually. Maybe I'm underestimating my audience, so I don't mean to do that. But so I mean, I haven't looked in a couple of days. I think it was yesterday that I looked. So I haven't looked since yesterday. But a lot of proposals that are connected to projects that you either have your hands on or are directly related to are not passing at the current point. Is there anything that you think that you might want to say to the people that haven't voted yet, and why it's a good idea to go in there and to vote for these projects, and maybe not even just the projects that you have a hand in, but maybe even NFT rewards, whatever it is? Is there anything you'd like to say to maybe, maybe sway somebody that's on the fence on which way they should vote?
Uh, a good question, Coop. Look, for me, I think everyone does need to sort of think about what they want to see from the ecosystem. I would suggest if we want to see DeFi continue inside Algorand, TDR is a fairly critical piece. I think our energy needs to be less about fighting over whether TDR is a good idea or a bad idea, and more about what we actually need to do to get to the end goal. It feels like we get caught in these arguments about some of this stuff, which it's not to say it's not important, but we don't seem to talk at all about where we are going as a collective blockchain and what we need to do to get there. That feels like it's almost a non-event in terms of discussions, and I don't know that there's anyone I talk to that really has a very clear picture of where we're heading as a blockchain, and what does Algorand look like in 5 years? What products do we see on chain? Who are the key B2C customers? Who are the B2B organizations? Like, what does that vision look like? Who are those individuals? Who is our target audience across whether it is B2B or B2C? Who are the people who are leveraging Algorand, and in what capacity? Do they know they're leveraging it? Is it fully abstracted away? Are they fully aware of what they're doing? Are they self-custodying? Are they not self-custodying? And I really do not think we have a clear picture of what that looks like. That we need to articulate well, and then collectively as a group move forward. And if, for example, we said, DeFi isn't the future for Algorand, I would embrace whatever was analytically the best option for Algorand to push ahead with. I would embrace it with the idea that I want to see Algorand succeed, and whatever is most likely to achieve a great outcome for the ecosystem is what we should all ideally be pushing ahead and working towards.
Yeah. But I mean, you've been here since the beginning, before launch. You're not talking to people that you feel like have a clear vision, huh?
Look, I think a part of the issue is we have a lot of verticals, and we have a lot of projects that we are trying to nurture, and we are trying to keep alive, which, and this is why I sort of say, if DeFi was to get the chop, obviously it would have a fairly direct impact on myself personally as well as professionally and all the rest of it. But
it would also kill much of the retail too, even though there's a lot of small fish. But I'm certainly no whale. But if there's no DeFi, then what is retail even doing here anymore?
Completely, and I think sort of my point would, and look, if it got cut, I'd still talk to you. We could still do chats about Algorand. I'd still be up for it. But I think we all have our own bias, and I think emotionally we all have our own reasons for what we want to see happen. And I think we need to try and put as much of that aside and have a real analytical review of where Algorand is going, what it should be doing, what resources we have on hand, what our competition looks like, and where is our best path to success.
Yeah.
And that's what we collectively, and look, I also do feel like if we had a really good strategic plan, I think most of the ecosystem would be fairly embracing of something that felt solid. And the key piece here is having all the information needed, because I feels like we lack so much information currently. Even things like TDR, I don't think anyone has any real insight into a few different pieces, such as what is TDR actually doing? There's this kind of measure of TVL. Is it measured in algo? Is it measured in dollars? If you compare those two, they're also two very different metrics. Which metric are we using? Is that the metric that matters, or is it number of LPs and pools, or is it number of people doing trades? So, then also, what is the backstory as to why certain things were done? Like, it feels like most of the community has no idea what's going on, which is very fair. I don't think they really do. So I think that's missing. I also think that the TDR budget is nowhere near enough to do what we're expecting it to do.
Right.
So the analogy I used in one of the DeFi council meetings recently, it was like we've been given a $50 budget to do $1,000 worth of work.
Yeah.
And that's also the real issue. We're saying we want to grow TVL drastically, and I don't know that we can grow it drastically. To my point before about even if we 10x the volume and the TVL, we still are going to be nowhere near as effective as some of these other AMM products. So we don't just need to bring in the liquidity; we need to improve the products we have now in order to achieve some of these goals.
Well, and you said Pact may have some good news coming. Any kind of color to that? Like, what are we talking about there?
I probably shouldn't have even said that much, Coop, if I'm being honest. But look, with any of the stuff, like we honestly we don't have the time to do most of this stuff. We basically, even some of the team helping out with Pact, it's not like they gave up other work, right? That they now just do more hours and spend less time with their families and are unpaid for that work they do for Pact, and just trying to help keep one of the key projects alive to get it through to this next stage and keep it into the next bull market so we don't have to rebuild. Because I also keep in mind that I think we can't have one AMM. It's actually a fundamental problem for the ecosystem. If we have one and there's a problem, everything stops. So, most of these things we really aren't doing them because we want to. We're doing them because we think it's a crucial piece that shouldn't be left out in the cold. And so most of our work is just really trying to find whether it's M&A deals or whether it's something else similar that we can then give it it's the sales it needs to run under its own steam, and then we can sort of step back and no longer have to help. Is kind of the dream scenario. So hopefully that's sort of where we're getting to with Pact, or that's the goal for the next sort of month or two.
Okay. I think you definitely, for those listening, I think you gave a bit of an answer in there. And what let's talk real quick about Meld. Let's talk about Meld Gold. Why should people trust your tokenized gold and the silver? And is it just gold and silver? I think you said that there was more coming, right? But
yeah, so gold and silver. We also have already built the technology for platinum and palladium. So the key issues are, which gold and silver have a very clear regulatory framework almost globally. Palladium, for example, does not. It has different classifications in different countries. And I do think, again, the legalities for a lot of people are heavily missed in terms of what you can and can't do. And it's an expensive minefield is the best sort of description I can give. So those metals I think will come, but also something to sort of, which I also think is probably overlooked slightly, is launching things like platinum and palladium. It doesn't make sense unless we can be certain of liquidity in those metals inside the ecosystem. Otherwise, it's kind of like, it's deflating more launching if it's not actually, and marketing around it if it's not actually going to do something interesting, which, for platinum and palladium, we need to create some pretty interesting, DeFi Legos is the best description in order for those metals to be well received on chain. So, another good example with Algorand, gold and silver, BTC is the same, ETH is the same. Their prices aren't dictated by an AMM. So Coop price, even things like, you could even stretch and say things like GORA price, things like Tiny price, Folks price, a lot of their pricing will be dictated by the AMMs on Algorand.
Right.
So, in reality, it makes it actually more viable to have them within the AMM ecosystem because their prices are dictated by market pressures that are mostly going to be made up of AMM volatility. Whereas things like gold and silver, 99.99% of the pricing is external to Web3, which means movements from slippage in market trading is kind of no indicator of anything whatsoever in terms of the real price. So, the tooling currently in Algorand is not ideal for things like metals, FX trading, even BTC and ETH in its current your traditional AMM format. So the where I sort of see gold going in the future beyond finding utility for gold. So, for example, if you're a gold bullion holder now, getting a loan is painful, it's slow. The rate you get is not great. There's a whole heap of setup fees. There's a whole heap of legal paperwork. It's actually a very cumbersome, painful process.
Right.
You can go you can go on to Folks Finance, and a USDC loan costs you more than usual at the moment. But
I don't know what happened. It was like 40. I have some in there, so it was nice to see the
APY. But it's definitely easy and it's definitely very quick. And traditionally, those rates would be lower. Or similarly, you can go to XBacked and borrow at a 3% rate. So those kind of utilities are extremely important. But I think also where I see something like gold, people often compare gold and Bitcoin. I'm a big believer in both. Gold is much less of a volatile asset. So I actually more liken gold as an alternative to fiat. In the sense, if you're going to sit in fiat, I would suggest sitting in gold would be a better alternative. So it's not a matter of deciding, do I want gold, do I want Bitcoin, do I want ALGO, do I want something else? It's more, if you're going to have some of your holdings in fiat, having your holdings in gold is a better alternative, not financial advice, a better alternative than holding it in fiat. And then similarly, I think long term, where it'd be great to see gold go is if you're going to see fiat pairings, it'd be good to see gold in place of fiat in those pairings. I think that's also a far better alternative to fiat pairings. And so that narrative hasn't been sold out there in the market yet. But, we have two major other gold tokens, which is Paxos and Tether. They're probably the two largest. There's a few others as well that are quite significant, but they're by far the two biggest. I think where Meld differs, and this is where a lot of its work happens outside of Web3, is its work with the industry. So for those that aren't aware, I started a gold company here in Australia when I was 18. It was a shambles. It was my mother's garage. It was, Besser blocks and timber for desks. But the first employee, who's also named Michael, still works in the company. He's now COO and a business partner and a brilliant guy. But he was there with me when we had a fan and some Besser block desks, and built that company into one of the largest gold companies in the Southern Hemisphere. So we work with most of the majors globally around precious metals. So the key difference with Meld is it works on bringing the precious metals institutions and all the way down to the small organizations utilizing blockchain. They actually don't even know they are in their transactions, but utilizing blockchain to get better value and streamline their processes in the supply chain. Whereas things like Paxos and Tether just directly digitize major chunks of metal inside vaults. So that's kind of the key difference between the two, is the infrastructure is designed to bring the industry on chain versus just digitizing metal. What that'll mean long term is, and some people might have heard me talk about this over the last few years, is those companies will end up being alternative asset dealers, not just gold dealers. They currently deal in alternative assets. They just see those alternative assets as gold, silver, platinum, and palladium. We would like to see that extend to gold, silver, platinum, palladium, BTC, ETH, ALGO, an additional range of assets. They already do KYC, they already do AML, they already do all of the things that crypto transacting requires. They just do it specifically for metals and don't include these other additional alternative assets in their range of offering. So ideally, that's kind of where the tiptoe process and similarly to, I think, the issues Silvio and Algorand have faced. Most of these organizations, it's a slow process. They a really good example, one of the biggest in the world that we work with, they were the biggest, for many years, they were the biggest recycled gold processor on the planet. So they process more recycled gold than anyone else in the world. They would never fully bring everything across into the platform because they don't want to cut ties with organizations they've dealt with for 60 years, right? So, you got to keep in mind, this is some of the things that, bringing these companies into Web3 deal with. So what they do is they'll bring across 5% and just try it and go, okay, nothing blew up in 12 months. This is okay. Well, now we'll bring across 10%. Now we'll bring across 10, 20%. Right. So there is a real process of getting comfortable, feeling like you aren't going to disappear, that if we do this, we can also have a 60-year relationship with you. Like we've just had for the last 60 years, we just get all the improvements and all the value you're offering by being more innovative and offering something of value above and beyond what the alternatives are. So, a lot of these organizations we're talking about have very similar issues, and we're trying to navigate those problems in bringing those organizations. So there is definitely a chunk of patience. And for someone like me as well, who's very much been in favor of technology, it can also be frustrating. It's like, just bring it all. It's so much better. But it also doesn't make a lot of sense. And, I've also got to keep in mind that, a lot of these organizations have some really smart people in them who have been through this before. This isn't their first rodeo. They've also been through with companies that have said, this is incredible, you should bring it all, it's going to be amazing. And then it's blown up in 2 years, So, you sort of got to be conscious that this is a reality of some of these companies doing business. And keeping in mind, they're also conscious that they might have 1,000 employees. Yeah. And they want to ensure job security, and they want to ensure they're not taking extreme risks when there's so much on the line. So, it is a complex creature to deal with.
Yeah. So for the regular guy out there that is like, okay, well, I want gold exposure and I don't need it to be bullion, and I would like to be able to leverage it. I think this is a good idea. I buy a lot of what Michael just said. And so, I mean, so they can count on the fact that it's tokenized by Meld, which is, look, I got a little thumbs up. I didn't know that was going to happen. But that it's tokenized by Meld Gold, which is one of the premier, Southern Hemisphere gold companies, like you said. And then, so you can count on it. And is there like a redemption? I think people, a redemption is obviously you can swap out of it clearly. But if somebody's like, I want my, I want my 3 ounces or however many grams in bullion, can they do that through you guys with this?
Yeah, so you can via Australia. So that doesn't mean you can't from overseas. It can be shipped to you from Australia.
Oh,
So there's 2 main storage locations currently, which is Switzerland and Australia.
uh-huh.
You can actually technically do it via Switzerland, but like with things like Tether Gold, the actual redemption amount is significant. So it's not 3
Yeah.
ounces. It's a
Yeah.
400-ounce good delivery gold bar, or just stuff that's not really viable for most.
Right.
From Australia, you can go all the way down to a 1 gram gold bar. So you can actually withdraw a 1 gram gold bar. The way it actually works is
From outside of Australia, you don't have to like go and like, high five a kangaroo and then, go get your.
you're welcome to. You're welcome to come for a visit and pick up your bar. But no. So like obviously you can't ship to North Korea. Like there are some restrictions,
Right.
which just isn't possible. I don't know you'd be able to get over here and high five a kangaroo if you're from North Korea. I'm not sure how that
Yeah, I
actually
think
works.
it's probably hard. Yeah.
Yeah. But most countries are fine. The key issue is, obviously shipping, and the rest of it is just that additional
Does it
cost.
make it
And the
worth it? Yeah.
Exactly. So the way it actually works is you have your metal. So a part of the Meld system is the Perth Mint, which is, for those that aren't familiar, the Perth Mint is actually Australia's like official bullion production government-owned organization. Here, it's also the largest mining refinery on the planet, so it processes more mining material than anyone else in the world. So it's actually one of the top, I think it's number 3 in the world, precious metal company. MKS PAMP, which is the Switzerland storage location, is the largest gold trader on the planet, so they're a part of the system. Heraeus and Metalor, we work with both of those as well, the 2 biggest in Asia. So you can also choose from a range of different branded bars. You can choose Perth Mint coins, you can choose low premium bars, you can choose MKS PAMP minted bars, and you basically just pay the fabrication premium. So if you want a 1 gram bar, it's more to make that bar out of the 1 gram of gold than if you want to buy a good delivery bar. So you basically have your metal and then you pay whatever the cost is to fabricate the bar and then delivery, and you can be received wherever you are in the world, as long as it's somewhere that we can ship to.
Yeah. I mean, I don't know that people actually really understand that. I mean, and I don't know that, I don't know that everybody understands how serious Meld is and like what, the stature of that company and how trusted it is. And, I come back to the beginning of this conversation of that, Algo Mint in general with, Go BTC and Go ETH and like how trusted it has been in the ecosystem. And to me personally, to see you guys get hit, and I'm not saying, I mean, I don't know, maybe I should ask, do you think if TDR goes away, and do you think that could be so severe for something like Algo Mint that you might not be able to continue to exist?
Just quickly on that last one too, Coop. So not many people do redeem, mostly because there's not a huge
Cost too
amount
much
of
money.
reason to do so. Yeah, exactly. So we actually do have one recently. So we had someone digitize about 600 kilos of silver, mostly because they wanted to borrow. They then went and actually redeemed. It was about 10 days ago, and they actually came and pulled out 600 kilos of silver.
Wow.
Because they did exactly what they needed to do. They got the loan, they bridged their finance gap, and then they actually brought it back out of the ecosystem. So, there is definitely use cases to do it, but that is probably more the use case than necessarily wanting to take your bar and put it in your safe, for example.
Yeah.
Because, I think the people, we personally find those that do redemptions here in Australia, that it's more about just making sure they can than wanting
Yes.
to. So it's more of a
Yes.
test than anything else.
Well, it sounds to me that if you're not dealing in massive size, it would make a lot more sense to swap to fiat, send it to Coinbase, send it to your bank account, and order it from JM Bullion. It's probably a
Yeah.
less of a fee. Yeah.
Exactly. You're going via APMEX or so. So we've often
Yeah.
talked about the idea of just making gold dollars and silver dollars spendable by someone like a JM or an APMEX or someone of that nature. So it's a part of the checkout where you can actually use your gold dollars to buy the bars you want, which I think is probably the more likely efficient route we'll end up going.
That's such a great idea. Why, yeah.
The
That
transaction's
would have
the
been a
same.
great question. I wish I had thought of that question.
The transaction is actually extremely similar. It's maybe like a 0.5% difference, but you can pick any bar from any deal that will accept it as a payment method globally. That sort of, for us, we feel like that's actually a far better use of resources than trying to get some held in the US and some held in Sweden. And
Yeah.
so, redemptions are certainly possible, and you certainly can do them. We also have been doing a lot of work around the audit system being more transparent. So we've lodged several patents around that audit system we developed. So I think that'll go live like Q3-ish, where you'll actually be able to see what metal is where. No. There is some additional elements, which is like most of it's around insurance and ensuring coverage of not showing part of the issue was showing too much transparency, like someone being able to see, oh, there's $50 million of that building, is not ideal, but it's something we've been working through for quite a while now. And we think we've got to the point of having it covered off where we can be a lot more transparent about exactly what is where and what it's doing. So I think that'll be great once that actually goes live, which will be good. In terms of if TDR, go.
Sorry, I was just to, will that is that going to be on blockchain? That type of, are you guys thinking about doing all that on blockchain and all that?
Yeah, well, it's interesting. So the other piece that we did a lot of work on, and we developed our own structure around having very specific items connected to the blockchain. So a really good example in the Bullion world would be able to own a very specific bar in a vault. So we developed a process to permanently tag a physical item and have that through RFID and NFC connected to the blockchain. So, to your example, Coop, like maybe you want to have the fungible asset because you can go and do all kinds of, composable things with that asset. Mm-hmm. Or you might go, I want I want that exact 1 kilo dragon coin from 2024 issued by the Perth Mint or the Canadian Mint, and you could own that specific item in the vault and see where it is. Which we actually think will be super interesting. There's obviously a whole heap of additional, products that attach on that, whether it's diamonds or trading cards or something else. So that will mean you could own very specific items and see exactly where it is and actually see it live and existing in the vault, which I think will be super interesting. So that's that sort of next layer of what that connected to the blockchain looks like. Which, I don't know that it'll all end up being exactly that, but we'll definitely see at least a portion end up in some kind of version of that.
Yeah. Okay. And then you can now, to the TDR question.
TDR question. Look, it's going to make it harder. And again, if we said, okay, we're getting rid of TDR, but we're going to pull in this other piece, which is have a very clear strategy and help the project's resource to help achieve that goal. If DeFi is a part of that strategy, that would be brilliant in place of TDR potentially. That would mean TDR is not as actually necessary as well if we did that. And we said, we're not actually going to worry about that as much. We're going to worry about getting everything in place to have DeFi robust and ready to rumble and competitive and ready to tackle any other DeFi and any other protocol where we can actually say we go toe-to-toe with them. Plus, we've got this incredible foundational technology. That would be an alternative to put in place of TDR. I think if we don't have either, that's where we've probably got a real problem for DeFi.
Yeah. Well, Michael, is there anything that we left out? Is there anything that we should have talked about? How about this ADA to Algorand bridge? Is there any hope on that? I have not looked at that proposal.
I think it's the second most voted for proposal, but I don't think it's quite passed in the sense that others have passed, but they had smaller asks, so it was easier to pass. So I think last I heard, it was second in the running. Okay. Which I think is pretty solid. To sort of give a bit of thought about where the thinking came from, it was a lot to do with if we are going to bring people out of other ecosystems and we've got the budget we've got, which is current TDR, where are we most likely to see success? So, the argument was it's probably going to be easier to bring people from Cardano in the sense that they also have they don't have a lot of the building blocks. It's still not, the DeFi ecosystem is not fully robust. It's probably comparative in terms of the protocols that are available. And if we can actually bring them over and go, hey, all that stuff you've been doing over in Cardano, come try it in Algorand, and it's so much better. The idea was, the cost of customer acquisition out of something like a Cardano ecosystem would potentially be much lower than from other ecosystems like, Solana or Avalanche. So that was a big part of what that thought process looked like.
Sorry.
So, it'll be interesting. I think it might pass. We'll sort of see how it goes, but, that combined with still these other pieces still need to be put in place. I think, the other thing that I think a lot of projects get grief for is not doing a lot of marketing, which, I do think collectively we could all do better on as well.
Yeah.
So, I do think there is a lack of that marketing side across most of the protocols. And, from a lot of them, I talk to most of the teams, some of them, it's just, they've got 50 other plates spinning, and it's kind of the thing that always gets left off, which is not ideal. And it's what the community sees. And it's then feels like, oh, they're not doing anything. And it's not necessarily true, but it also doesn't mean it shouldn't be done. So, it's a tough one.
Yeah. I mean, I think that, sorry, I'm falling apart over here. But I think that you're absolutely right. I think that thinking with ADA is, and there's also a symbiotic relationship just between the two communities, even though maybe we're a touch competitive. I think that's actually in the past. I think that there's a mutual admiration from a lot of us towards Hoskinson, and obviously towards Silvio, and John Woods also helps bridge that gap for a lot of people. So I think getting people over here from ADA would be a good thing. I think the experience would be positive, and there's a nice symbiotic relationship between the NFT communities, and we could end up over there and providing some stuff over there. I think that it's a smart play for you guys and for the ecosystem. Well, Michael, sir, I really appreciate it. I'm so glad that we were able to have this chat. And I certainly wish you guys nothing but all of the success. And I appreciate the support that you guys have done for my show over the years. You've always been so willing to come on. You've always been so positive about my show. And it's like even through the things where the last year or so where I've been calling out whatever I think is right. I've always felt supported by so many, and you guys included. So thank you so much for coming on. And we'll see what happens, right?
Mate, thanks for having me. It's always been brilliant. And look, we've known each other for a long time now, and we've seen some quality ups and downs.
How about the ups?
Yeah. The ups, yeah. So it's been brilliant, mate. It's always been great working with you, and thanks for always having us on, and always be willing to have a chat.
Yeah. All right. Well, we'll see. I think when does voting end? Do you know?
I don't think it's too far away. Yeah. It's
like a week or so. About a week.
Yeah, exactly.
Right.
So I don't know. We'll see what happens, but I think what it'd be great to see is we get a plan together for the ecosystem, and hopefully it's then something we can all work towards.
Cool. All right. Well, let's support. Look, if I'm in charge, I want to support DeFi, and I'm not, but I do. I think it's a good idea. I think that it keeps people active, and I think that also by having a supported DeFi, it also keeps artists here. It gives them things to do with what they make off their NFTs. It just allows for a lot of activity to happen that I think is necessary. And like you said earlier, if the mission is clear and it's not that, then let it be that. But that's clearly not what has been happening. There has been a focus on DeFi, so it would be nice to see it through.
All right. Yeah. No, look, I agree. It would be great. And look, I think I think the argument would be, why don't we all go and create a strategy? I do think, though, that the organization that understands it best is the foundation. So I think and I know they have been working on something. So I'm hopeful that, that's exactly what I've just articulated would be great.
Yeah.
But, we just getting the right information to understand really where we're at and what's ahead of us and what it's going to take to deliver on different pieces and what we should be focused on would be brilliant.
Yep. And you got to, there's definitely serious people, very bright people at the foundation. And, a lot of these projects obviously can't be talked about. There's a lot of different reasons why they can't be talked about. There's legal reasons. There's a lot of different things that could be going on. So, all hope's not lost. And I don't think that you've ever said anything close to that. I don't believe that. And I don't think most of my audience believes that either. So I don't even know why I said it, but it's just for those that might.
Matt, in reality, the technology is incredible. I think John Allen Woods is doing some great stuff in sort of shoring up the tech as well. That we're going to be in a really good position. I think we just now need that business strategy overlay to really unite these other pieces that are so strong, and we'll hopefully be ready to rumble. And again, I think everyone who I speak to would be happy to embrace something that makes sense and has the right information and data behind it, and is sound. I think would be something all of us would get behind.
Yeah, I know. And now I'm just like, now we've said goodbye, and we just happen to be walking the same direction. So like the conversation, but I mean, I think I asked it, and is it, what? And but I'm going to make you answer it again, I guess, and then I promise we'll be over. Why the hell are you still here? Why are you? You can make it about Algorand, and I think that's what I mean, but just why are we still here? Why are you still here at Algorand? Why are you still messing around with blockchain technology? It doesn't have to be a long answer, but just, is there anything new that, I don't know?
I'd probably say it's two things. One, like the tech, I've always been a big believer in, and I think most of the ecosystem have done this, where they've gone, "Oh, all right, I've had a bad day," or whatever it happens to be, and they go over and go and use something else, right? They go over and go into Solana, or they go into Avalanche, they go into Polygon,
Yeah.
they go into Ethereum, and they use something else, and they go, "Oh God, that was." I feel violated.
I just spent so much money on nothing.
What am I doing?
Yeah, and I don't know how to do this concentrated liquidity, and how much is that gas? Like, yeah.
Yeah, and so that is obviously a fairly fundamental piece of the puzzle that I think all of us go, this technology actually solves so much of, I don't know if you can hear my dog going mental, but this technology solves so much of the problems that everyone in the other ecosystems go, we're going to get there one day and we're going to solve these issues. Algorand has solved so many of them. So I think that's obviously a really big piece. If we can actually deliver on some of the things needed to actually then make the technology really usable and attractive, I think we can all see why it would be so brilliant to see it built on Algorand. Look, and I think on top of that, we certainly have committed and been big proponents and brought a lot of people into the ecosystem. So we also, and I speak for Optio and Meld Ventures, we've always had a fairly strong desire to see it through as well. Especially because we've brought a lot of companies, a lot of builders, we've brought a lot of users, a lot of people into the ecosystem. So, there's also the side that we do feel a really strong responsibility to ensure we do everything possible to maximize, what we've always said would happen inside Algorand, which is, it'd be successful and be an incredible technology.
Yeah. All right. I'll let you go now. All right. Well, thank you so much. Yeah, well, have a great rest of your day. I know it's just beginning for you. So
thanks, Coop. I appreciate it, mate. Have a great night.